Hey everyone, hopefully having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions, generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive right in, take a look, see what people are sharing. If you want to follow me at @Finance, and if you want to join our community, findinghappyvalue.com, I dive deeper into all these things, looking for potential investment opportunities. We do have a coupon code, a special going on, Black Friday. It's all together, one word, Black Friday. Put it in, try it out. And we do have a midweek update that's being released today where I share my opinions on what I follow in the markets. So Patrick Karam, we'll start with him. He says gold's fourth historical capital rotation event is looming around the corner, expecting silver, uranium, copper, crude oil to do very well afterwards. And this is one of the main things that I look for and look at to tell us where we're at in these cycles. So historical capital rotation, we've got 1931 event, 1970 event, 2002 was that big move that we saw last time that I experienced and went through it. And here we are right now, zoomed in, breaking the uptrend, but are still hanging on, ready to potentially fall. What this means is that gold is outperforming the S&P 500 or Dow Jones. This one here is the S&P 500. So when it falls, gold is outperforming the S&P 500. I use the Dow, that's the one that I use, but the S&P, you can use that as well. You can also see the distance from the 36 quarter moving average is right on support, ready to break down. These big events where things break out like this are incredibly bullish for precious metals and for commodities. It does not matter who the president is. It does not matter all of those things that people think matters. This is more structural. It's more ingrained into money supply. It's more ingrained into the design of the money supply, is what I should say, and also the supply of commodities. So it's a mismatch between the increase of credit, which generally occurs from a demographic coming through home buying years. That's the real estate cycle. Or you get into a problem with your fiscal spending or government spending. So either one of those areas is where the problem can come from. And then if you have supply constraints, that's another side that can have problems. Not a lot of people know this. And it can confuse a lot of people when you start to talk about this because they don't know some of these cycles. This one here, this short-term cycle, is the real estate cycle that's driving it. So Jenny Many Dots says, in a world increasingly obsessed with quick wins and quarterly results, the legends of the natural resource sector remind us that true success lies in vision, patience, and resilience. Says when I look at the people who have truly succeeded, company builders like Adolf Lundin, Bob Quartermain, or Ross Beatty, or investors like Seymour, however you pronounce that, Ned Goodman, Eric Sprott, and Frank Giestra, the common theme is that they build for the very long term. And that's what you have to do. You have to take these long-term charts where they're rolling over like this, and then this is what's difficult for a lot of people. It's taking positions when something's cheap and at a turning point, and then going long the entire bull market, going from long from here to here. It will net you many, many fold returns. Not 2x, like 10x, 20x, 30x if you can pull off bottom to top. Not many can do it. Conversely, when you get to the bottom, you want to go long in the S&P 500, you want to get really long in technology stocks and all those things. And that's when you ride it from bottom to top. The last bottom occurred that the ultimate bottom occurred in 1982 with interest rates peaking. So that was the move from here to here on the ratio. It's all the way up, your dot-com bubble, and then we went again. But we had a declining interest rate environment that entire time. Now we've got an increasing interest rate environment, and the market conditions have shifted. So when this thing goes, it's going to be a much larger bull market, probably more like the 1970s, would be my guess. So you gotta take the long term. You're building for the long term. That's the viewpoint that I take when I build my portfolio. I'm building it for this next decade. Oil price. Natural gas is poised to power the AI boom. As US producers team up with data centers for reliable energy, with demand rising from tech and LNG exports, higher prices and output are on the horizon for natural gas. Natural gas, what was it, probably 6, 7, 8 months ago, on the website, we were buying at the ultimate bottom for some of the natural gas companies. One of the things that I try to teach on there is to sprinkle into positions. Sprinkle means to cost average into things when things are down, when the ratio is really, really cheap, and we're starting to see bottoming patterns. That is how you do it. Now, some of those positions are up pretty good. They're up pretty good. Now, it takes patience. It requires patience. It requires a mindset that you're investing for a longer term position. It's not a short term trade. JH, B of A, it says Brent may trade near $65 a barrel on a surplus. Gold still targeting $3,000 an ounce. Copper and aluminum may fall in the near term, then rally into the second half of 2025, is what this strategist is suggesting. But I mean, if we look at that, and let's just take their numbers at face value here. So $3,000 divided by 65, that gives you a gold to oil ratio of 1 ounce to 46 barrels of oil. If we get to 46 barrels of oil, that's going to be one heck of an opportunity to buy oil. I mean, one heck of an opportunity. Usually, how you get these mismatches is through the market conditions. When gold goes up and oil goes down, that's a slowdown in the market. If you get a slowdown, we should be seeing yields drop, historically at least, historically. And then the 2 and 10 should basically uninvert. We haven't seen that yet. And I don't know if they're going to stay inverted with inflation, perhaps, that we've got and a market slowdown simultaneously, which is a very rare combination, stagflation. But maybe that is the case, and we'll watch it together here on the channel. Demand for silver has been so strong since 2021 that supply from mines cannot keep up. The market is expected to record its 4th straight year of shortages in 2024. Look at the silver market heads for this 4th straight year, so shortage of 21, 22, 23, and 24 in terms of deficits running through inventories. Much more balanced market from 2020 and before. Now it's out of whack. Energy headline news. It says key OPEC plus countries have begun discussing to postpone the oil production restart scheduled for January, potentially for several months, delegates said. So they're not going to push barrels onto the market. They want the market to pull barrels from them. And that should put a little bit of support underneath the price of oil. Peter Schiff says all the talk about the impact of Trump's proposed tariffs on Americans buying goods imported from Mexico and Canada focuses on how those tariffs might negatively impact Mexico and Canada. But the real losers will be Americans, who will be forced to pay more for those imports. Now, I would do a trade-off. I would do imports. I would be fine taxing imports as long as we got rid of the federal income tax. I would be so for that. Because then you have a choice. Federal income tax, I have no choice but to pay it. There are things that I can do to get around it. There are things I can do to reduce it. I get it. If he reduces or eliminates the federal income tax, I would be fine with tariffs because I don't have to buy something outside of food and gas. And if it increases food just a little bit, I'm fine with that because my biggest expense is taxes on everything. Um, food is my second largest expense out of everything, and then I think it is my mortgage is after that. So I pay more in food price costs for our family than I do my mortgage, and then I pay more in taxes than what I cost in food, just total tax, I should say. Rock bottom entries, it says agricultural commodities are breaking out. So we're right there, looking like it's ready to break out. That's for Invesco DB Agriculture Fund. So we are seeing some momentum in some of these areas starting to get generated. And that is corn, wheat, soybeans, potash, DBA is what he's charting here, DBA. Investment wisdom, it's more important to ensure survival under negative outcomes than it is to guarantee maximum returns under favorable ones. And that's Howard Marks. Obviously, you don't want to get all leveraged up, try to get maximum returns, because if you get a negative outcome, you have to survive through it. And that's where people can get hurt, is they start to leverage up. They use options that have time decay on it, and things don't turn out the way that they wanted them to. Warren Pye says new home sales 610,000. This is the lowest print since 2022. Completed new home inventories continue to build. Watch for national home builders to hit the brakes on housing starts going into 2025. The U.S. housing market continues to struggle with 7% mortgages. So we are seeing declining home sales, new home sales specifically, with these high mortgages. Patrick says Canada is sending the U.S. nearly 4.5 million barrels of oil per day and a quality of oil, heavy sour, that the U.S. cannot easily replace. So that is something that we've got going on in terms of our crude oil imports from Canada. And not all oil is the same. This is heavy oil versus our light, sweet oil. And some of our refineries need this in order to refine. And more specifically, they're talking about tariffs, Trump's tariffs, and the tariffs may not include oil and energy. We'll see. Brady said even before called the commodities bear market low back in April 2020 that he thinks platinum will outperform silver in this bull market. And if silver's at least 12x from here, which he thinks, imagine where platinum would be if this ratio goes back to all-time highs. So what that would mean is it's a massive yearly bullish hammer candle at the bottoms there, this one and this one. We have a false breakout in the making, and this is where we could do a slingshot, where platinum could outperform. If platinum does outperform and we go to the top of that, which I'm not stating that is my best case, it's a best case scenario, not a base case. Platinum would outperform silver by about 6x. So if he thinks that silver is going to do a 12x, then he thinks that silver or platinum could do a 72x. And I don't know if that's possible, but I'm in it to win it. If it does that, I would be absolutely delighted. And hopefully I've got the cojones to ride it all the way to that top. A lot of the times when you're doing ratios with metals, you may not get the absolute top because you want to swap it into something else that's undervalued before it. So sometimes you don't ride these ratio charts all the way. You don't ride the dollar value all the way to the top. You ride the ratio to the top. And you want to get a favorable swap. Also, you want to take into account the premiums too to make the swap. So if you guys are interested in doing this, the ratios and swapping around, join the website, ask me about it, and I can go over that completely. I can go over buying the metals, like when's an opportune time, when to swap, some of the levels, and then how to do it, mechanically do it, going to a dealer if you want to go to a dealer and do it. Here's Anas. He says, this is more bullish than any bullish news we've had in recent weeks. And the Chinese government revised up oil demand data for most of 24. The revision is significant. Interesting. Still back testing the $30 level on silver. So this is a bullish, expanding, falling wedge as a halfway pattern. So boom, halfway, and a potential move higher at some point in the future. Mike Zaccardi says many 33-year-olds demographics are a tailwind to the housing demand. And this is what I focused on when looking at the real estate cycle. The real estate cycle is the interaction between the size of the demographics. So what you want to do here is you want to look at the older um, the older ages. These are already home buyers or homeowners, I should say, over here. And then as you go left, you're going into people who have less and less home ownership. You want this to track upward. The first time home buyers are like 35, 36, 37, 38, 39 years old. It changes all over the place. Here he says many 33-year-olds, i.e., are first time home buyers. We want this to go up. So we want to go from a low level upward if you want a housing bull market. After this cohort gets through this cohort here, and we get a decline that's back here, then we're going to have to worry about potential, real estate cycle problems maybe if the demographic shrinks. That is exactly what China went through this exact demographic. They had a huge bulge of home buyers and then a cliff drop off behind it. And now they're going through that cliff where they don't have all the home buyers behind. And that's where the real estate cycle goes into a large recession. And I don't think there's any way they can get out of it. I think they're kind of screwed. Go look at Japan. Japan had a big bulge and then a big drop off behind that bulge. When that drop off came into home buying years, there's no one there to buy the homes. So home prices started to decline. Interest rates decline, inflation declines, credit kind of slows down, and you get a disinflation slash deflation that can occur. And then they did QE to infinity. QE to infinity didn't help because they don't have the credit expansion and getting money into the system to rotate it around. Plus, you have lower demand for goods and services. So the demographics is actually a big deal when looking and evaluating an economy to invest in or not. The best demographics right now is probably India. Now, look, I'm not superstitious, but how does he do it? And he's talking about Jim Cramer says, all I can tell you is own Bitcoin. That's a winner. It's over. And then it just goes straight down after he mentions it. Maybe he's creating exit liquidity for his buddies, maybe at Goldman or wherever else. Wouldn't this be good news? So Trump is likely to exempt Canadian energy from tariffs, Wilbur Ross says. I don't know who Wilbur Ross is, but looks like energy could be exempt from Canada, from tariffs. BP CEO Auchincloss says oil demand keeps surprising us to the upside. And I think this will continue probably forever. A lot of people think that someone's going to go buy an electric vehicle, and what they end up finding out is that the electric vehicle is like a second car. They just use it when they can, and then they have another car that they use for longer trips that's gasoline. There's a lot of that going on. It's kind of like building renewables, but then we've got natural gas plants that get built alongside of it. And if we don't see the performance out of the renewables, then we just use a bunch of natural gas. It's the same thing with like electric vehicles and gasoline cars, it seems like, or diesel cars too. Here's Grady. It says there will be no bubble phase in this gold bull market because this time around, after the present final third bull move, the world will have a new monetary system backed by gold. This will pin gold at the highs value-wise, meaning there is no bubble. That's Grady's opinion. It says in a resumed bull market, there will always be a next resistance until there is not. And this, again, is his third and final bull phase, a breakout from the cup and handle here. The red parabola line fits perfectly, and the time frame makes complete sense for a move like this. The first gold move when Nixon closed the gold window, second, and then we've got the big blow off third. Trump's pick for U.S. Treasurer largest position, gold. He says, I think we're in a long-term bull market in gold. We're seeing reserve accumulation by central banks. I follow it closely. It's my biggest position. Even I was surprised when Poland said they want to take their gold reserves to 20%. And that's your new Trump pick for U.S. Treasurer. And he likes gold. But that's all I've got for today, guys. So we'll end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Black Friday coupon code if you'd like to put that in. 50% off the first month only, or a larger discount on the yearly membership. If you're in the monthly and you want to switch to a yearly, go ahead and use that coupon code. But that's all I've got. We'll catch you next time. This is Finding Value.